we like to evaluate each on their own merit. I mean, they're all unique companies with unique assets, with unique management teams, and we still think that they have a place in one's portfolio if you take a long-term view and you realize that this is still Tech 2.0 in today's world.
All right. Do you have? Can you give us some details on how we should adjust our portfolios right now, Jason? What do you think?
Well, again, if you're a long-term investor, you shouldn't be adjusting your portfolioos. If you don't own these stocks,
let's say you don't want to. If this really gets out of hand, where are the most vulnerable places?
We're the most vulnerable places in technology or among FANG? Just to clarify.
Go either. Just go across the board.
Well, certainly semiconductors have a lot of exposure to China. So I think if we see trade go sideways, they have more to lose than, say, a Google, which doesn't really operate in China. So you can certainly go through individual names and find exposure. That's fairly easy to say, what's the exposure to China? Oh, trade war is a problem, therefore I don't want to own that. But again, I don't think that's a robust analysis. So our view is to take a bigger picture view, look at what's happening globally, look at what's happening within their markets and how these businesses are operating and pick accordingly. And then also, like you said, valuation is important. A lot of these leading technology stocks in FANG aren't trading at expensive valuations. Amazon, for example, is trading at 45 times forward earnings. That's fairly cheap relative to its history, and it's a secular growth story in e-commerce and cloud. So that's how we evaluate this.
So, Jason, when I think about it, I'm a global investor. I want some technology exposure. It's obvious. We know the answer, you and I. The only place is the U.S. that you're going to get that technology exposure. There seems to be dispersion where investors, not like 2018, have to run straight for the FANGs. There's other areas in technology where you're able to get proper exposure. But walk me through how I should be thinking about the buyback story, in particular as we see corporations seeing a relaxation in borrowing costs. They're able to issue debt, as Apple has done over the last couple of years. Right. Alphabet is committed to increasing their buyback. Are we going to see a significant acceleration because of the Fed actions over the next 6 to 9 months, which be specific to technology?
No, I think that's a great point, and we very much could. I mean, these are cash-rich companies that, the bathtub is filling up quicker than the drain is going out in terms of free cash flow. So they have a lot of capital, and as we look at the businesses that we want to own, we want management teams that are good stewards of our capital, and looking at buybacks, looking at dividends. Apple's a great example, as you mentioned. I mean, this is probably the best capital returns program on the planet coming from Tim Cook and Co. So as shareholders, we certainly celebrate that and want to be owners there. Google's been increasing their buyback. So there's a lot to like about cash return to shareholders with these large technology companies. Meanwhile, we want to be clear. We want to make sure we're seeing these companies still investing for the future. We want to see them doing strategic M&A. We want to see them investing in R&D. And all of these companies are growing their percentage of R&D relative to sales. So those are good things. But again, to your point, interest rates are low. So if you're going to take on some debt, some cheap financing to buy back stock, if it's attractively valued, and that's key, we don't want management overpaying on buybacks. I think that's a good strategy and something investors should look to as a component to their investment thesis.
All right, Jason. So we'll stay the course, I guess, is what we're hearing. Appreciate it. Thank you.
Yeah, you're welcome. Thank you.
When we return, a potential resolution of one chapter in the opioid crisis. We're going to bring you the latest on what could be a multi-billion-dollar settlement for one of the industry's major players. And we'll talk about the impact on other drug companies as well. Stay tuned. You're watching Squawk Box on CNBC.
I don't know what's going on.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Exams are over. You nailed it. And now the buzz is all about what to do next. Sound familiar? If you're still deciding, look no further. Because sometimes a sunny day like today can mean a new perspective. So this afternoon, why not check out the degree and foundation courses at the Uni of Bedfordshire and see how you can make the most of their bursaries available for all students. Find out more online and call the clearing hotline. University of Bedfordshire. Graduate as a professional.
Strength and things. Strength and things. Strength and things.
whole range of strings and things called Strings and Things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and Things.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire.
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and valuation.
Welcome back to Swap Box on CNBC, live from the NASDAQ market site in Times Square. Let's look at some stocks to watch. This morning, Autodesk, mentioned this one earlier, reported quarterly earnings of 65 cents a share. That was below estimates. However, the maker of computer-aided design software also cut its full-year forecast, pointing to trade and economic uncertainty down 12%. Awful. Papa John's shares are adding to yesterday's nearly 10% gain. Several Wall Street firms have upgraded their ratings on the pizza chain stock after the company named former Arby's president Rob Lynch as its new CEO. They've had some management changes in the past couple of years. What, second CEO? Second CEO. No, I don't know whether they have the meat yet or not. We've got you wondered.
Wendy's has the beef.
Yeah, where was the beef? Yeah. It was at Arby's. They have the meats.
Meat. They have the meat. Wendy's. Where's the beef? Wendy's has that.
Got it. All right. I think I got that. JetBlue shares are higher after the airline got a buy recommendation. Or we could say Deutsche Bank has a buy on the stock. The firm says the recent 15% pullback provides an attractive entry point. JetBlue has a good balance sheet and a solid market position.
A potential turning point in the fight against opioid abuse. OxyContin maker Purdue Pharma and its owners are offering billions of dollars to try and settle thousands of lawsuits related to the prescription painkiller. Meg Terrell is here. She has more on this story. Good to see you again, Meg.
It's great to see you guys. So the potential settlement would be $10 to $12 billion, and it would involve Purdue Pharma declaring bankruptcy. Now, this was first reported yesterday by NBC News and marks what appears to be a potential acceleration toward a potential global settlement for thousands of cases brought by states, cities, and counties against drug companies and others for their role in the opioid epidemic. Now, the Purdue settlement would see the company restructured as a public benefit trust from which profits from OxyContin and a drug for opioid overdose would go to municipalities involved in the settlement. The company would also donate $4 billion in drugs, including those used to treat addiction, and the Sackler family would pay at least $3 billion. Now, Purdue is a privately held company, but the news affected shares of other companies involved in opioid litigation, which were already on the move this week after Johnson & Johnson lost its opioid case in Oklahoma. Now, what's notable about this news is that Purdue appears to be close to reaching the settlement with multiple parties. Until recently, it had appeared that states were on their own track, separate from the cities and counties that have been consolidated into a huge federal multi-district litigation in Ohio. The judge there has been pushing for a global settlement among all the parties. The question, of course, is whether they can come together. On the defendant side, you've got drug companies, drug distributors, and pharmacies. And while the situation has been compared to the tobacco settlement in 1998 for about $250 billion, analyst Patrick Trucchio at Berenberg points out, guys, that the defendants here are much more disparate, so it can be hard to reach a conclusion altogether.
Yeah, Purdue is privately held, but if it was a publicly traded company, where do you think the shares would be today?
That's hard to say. I mean, if you look at Teva, Endo, and Mallinckrodt, these are the other companies that are really in the crosshairs, and those were, for the most part, generic manufacturers. This is a branded manufacturer who is so closely aligned with the opioid epidemic. I mean, it would be...
To me, I would think that the shares would be up on the idea that you could reach a global settlement that wouldn't completely take the company apart.
That's right, although
I also think it's early.
Bankruptcy.
It's early. It's early to see if that would even be enough. I mean, this is the offer that's out there, so I guess you see what happens.
That's right. It hasn't been agreed to yet, so we'll see. And some folks are saying that it's not enough. I mean, David Maris at Wells Fargo put out a note this morning saying he expected it would be more given the company's history.
Right. Not signed, sealed, and delivered yet.
Right.
Meg, thank you. Joining us right now to talk more about the story is Bethany McLean. She is Vanity Fair contributing editor, also the host of the podcast called Making a Killing. By the way, Bethany's also a CNBC contributor, and she interviewed David Sackler in June, detailed in a recent Vanity Fair piece. Bethany, it's great to see you.
Thanks for having me.
What do you think about this potential settlement deal, what it means for the family, what it means for Purdue, and then the industry beyond?
I think it's a brilliant move because if Purdue can be the first ones to settle and the Sacklers can completely cut any ties they have to the opioid business, which they would not only by paying the $3 billion, but also by selling Mundipharma and contributing another $1.5 billion from the sale of that overseas entity, which is not part of Purdue. And it would disassociate the Sackler family from the opioid crisis going forward. And if they can reach this global settlement, it's a way forward out from under this mountain of 2,000 lawsuits plus, which could increase any day, and there's no end in sight, right? I mean, this is the only smart path forward.
It just seems like when you talk about these 2,000 potential jurisdictions going after it, it would be great if you could really do that, but it still seems like we're a long way from reaching that end.
From people I've spoken to, this is not a done deal. It's a framework for a deal, and many of the details remain to be hashed out. Many really important details remain to be hashed out. So it's a framework. That's it.
When you spoke with David Sackler, what was your takeaway? What do you think about the family's situation? Obviously, the family itself is splintered in some of these things.
I think the family itself is very splintered, and I suspect there is some opposition within the family to this deal. I think there are still some who believe if we could only tell our story in the courts, we might be able to change public opinion. I think there's a real sense of righteousness within the family that the news around this has been all wrong, and that if they could only get out there and tell their story, they could convince the world to see it the way that they do. But there's that belief versus the realities of the legal system, right? And I don't think the discussions of a settlement mean the family believes they've done anything wrong. I think it's just the practicalities involved in this legal morass.
You mentioned Mundi. We talked about it in the last hour, but that again is the pharmaceutical or the collection of pharmaceutical companies overseas that were selling these same drugs, right?
Right. And so I think this is part of the way that if they sell that entity too, it gets the Sacklers completely out of the opioid business and cuts all the ties.
The LA Times had a fantastic series of investigative work into Mundipharma and pointed out that it seemed like it was pursuing sort of the same strategy overseas that we'd already seen in the U.S. with these drugs. And so you kind of wonder if that's part two of the opioid crisis going global.
I was going to say a global settlement doesn't mean global.
No,
it means all the stuff here in the United
States.
It
means globally in the U.S. with all the different parties here, of which there are many. And you also have to wonder about the Department of Justice here because they're not implicated in this settlement, as far as I know.
No, this is purely a civil settlement. Any criminal charges would be separate from this.
And so if the family settles or if the company settles, it would probably be without admitting guilt, as you said, in some of these other situations, because that could then be used against them.
Well, it's a civil case, so there wouldn't be an admission of criminal guilt anyway. It would just purely be
done wrong.
Right. There wouldn't be anything. But one pivotal point that I think remains to be seen is this idea that if there is this settlement, all the documents that have come forward in the litigation, which are now under seal, never get released, and nobody ever gets to know what really happened. And I think from what I know, it is a point in the settlement discussions whether there would be some giant document repository that everybody would then be able to go through and say, all right, let's excavate this. Let's see who knew what when at which companies. And I think that idea of transparency is so critical to the resolution of this. It does nothing if it does something, but it doesn't if all the documents get buried.
And you can't find the truth.
Yes.
So if the Sacklers think they need to tell their story and they'll come out looking good, why wouldn't they allow those documents to be not under seal?
You would think that would be the right answer, right? Lawyers have when lawyers get involved, all of this stuff gets complicated. But I really do believe, in my time with David Sackler, I don't necessarily agree with him, but I think he believes the story he tells. He believes in his family's righteousness. He doesn't think they've done anything wrong.
Bethany, let's switch gears. We want to talk about another story that you have out there, Tesla and Elon Musk. Obviously, Solar City, the company that was brought in, a company that he held before, was the biggest shareholder in, was the chairman, that he brought in several years ago. And what's happened? If you haven't seen it yet, the title of the piece is in Vanity Fair is called "He's Full of Blank: How Elon Musk Fooled Investors, Bilked Taxpayers, and Gambled Tesla to Save Solar City."
Quite a headline.
It is. Caught a lot of people's attention. He's a lightning rod, and he has his people who will defend him to the core, but then he has so many people who are detractors and say, there's nothing there. What happened with this story?
Someone I spoke to for this story described it as a religious war, and I think that's absolutely right. There's nothing that will sway believers, no facts that will change the belief, and there's not much, I think, that would sway the skeptics at this point either. What drew my attention to the story was I was not aware that the Buffalo factory even existed. I think that's been such a hidden part of this whole Tesla story, and that it's got $750 million from the state of New York to really revitalize the economy there. And thus far, it has been, let's use the mild word, disappointment. And the Solar City acquisition, while immensely controversial at the time, had kind of been forgotten, despite the unfulfilled promises to people in the Buffalo area. And so I thought it was a worthy excavation that maybe told a story people should know about Musk, or maybe Tesla believers would argue it's irrelevant.
They got $750 million in incentives, and as a result, they were supposed to employ how many people?
They were supposed to employ originally up to 5,000 people throughout the area. They were supposed to be almost 1,500 direct jobs at the factory, and then a number of other support jobs and jobs in the Buffalo area.
How many are there?
There are now, I believe, around 600 jobs.
The bigger question is, do these solar cells work?
Right.
Are they efficient and effective?
Right, and there are some details that have come out in one of the lawsuits against Tesla over the acquisition, alleging that they knew even at the time that the products being produced in the Buffalo plant, that the products being produced by Solar City were not what they were cracked up to be, that they weren't these miracle best-in-class products.
That in some cases it was costing 20% more than just the average.
It was actually costing more. And you'll recall that Musk made a big deal out of the solar roof, this really extraordinarily ambitious, game-changing product, when he was trying to convince Tesla shareholders, that they should indeed acquire Solar City. And the solar roof has not yet materialized in any meaningful fashion. If you believe Tesla, it's coming. This is now the year. There's going to be a big ramp-up at the end of 2019. We haven't seen it yet.
I guess at the time, it helped Musk because it prevented a company that he was so closely associated and involved with from being a disaster and hurting him PR-wise. But is this something that could really hurt Tesla longer term?
Well, that was the catch-22 at the time, right? Or at least a perspective on the catch-22 is that if Solar City had gone bankrupt, it would have dented Musk's reputation as a business genius and a visionary. It might have increased the cost of capital for his other enterprises. Yet by acquiring it, he put this thorn into the midst of Tesla. And there are several ways in which it could hurt Tesla going forward. One is the outstanding lawsuit. Another is the penalties they might have to pay in Buffalo if they don't meet the employment targets. And a third is the Solar City debt and what happens with
$3 billion when they
The narrative is so beautiful. I mean, the roofs were so nice.
They look really pretty in the pictures.
Really pretty in the Andrew. You love that thing, and then the sun goes right into your car. So right, and then you never pay another dime for anything. You have your electric car. You got the sun coming into your. I mean, if you just take it at face value, it's tough not to go. That's even better than Mars.
It's an incredibly compelling narrative.
Right, but if it's not, I mean, I would hope that there's something to the narrative, right?
Well, I'm sure there is something to the narrative. Whether the whole picture is as it is laid out, I think is.
I mean, then you don't even need coal to power the power plant where you're getting for the grid for your Tesla. You're getting everything.
And it saves the planet to build.
Right. It's just like so. And then if you got Beyond Meat.
Right.
If you're having that delivered by someone on a bicycle, I mean, it's just
carbon footprint.
It's just nice to see corporate governance at Tesla's.
Who would possibly want to raise questions about this?
And your email and Twitter account is for the Musketeers that are watching right now.
Oh man!
I made a full screen for it. Is that okay if I show it?
No.
Bethany?
No. I'm just going to laugh and keep my mouth shut.
Yeah.
Bethany, thank you.
Thank you.
It's good to see you.
Coming up, the U.S.-China trade war. In 3 retail stocks, we'll run down 3 companies, each with a different kind of exposure to the conflict that's upsetting markets worldwide. And we're going to try to reach some conclusions about what the ultimate cost could be for the world's 2 biggest economies. Stay tuned. You're watching Squawk Box on CNBC. It's Bethany.
Should you be selling stocks or selling bonds right now?
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day. At Gunwharf Keys. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Dad, I'm bored.
Why don't you help me wash the car?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Tottenham Hale to Victoria cycle route and play hide and seek on the way?
Whee!
Look online for Asda Tour de Fun to find amazing walks here in London. From waterways to easy trails. All powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Welcome back, everybody. We've been watching the futures this morning, and while we started out on the flat line, we have seen futures move lower. At one point, we were down by about 100 points, or actually over that, almost 120. Right now, the Dow futures indicated down by about 75 points. S&P futures off by 8.5. The Nasdaq down by 29. While everybody continues to watch the bond market and some of the lower yield prices that we've seen this morning, that's been motivating things here.
The U.S.-China trade war is taking a toll already on some companies' bottom lines. On the other hand, some businesses have found ways to weather the storm. Right now, we're going to talk about 3 retail stocks with varying levels of exposure to the ongoing trade conflict and get opinions from a couple of different voices. Joining us for that is Jan Niffen, CEO of J. Rogers Niffen, WWE. He's not a wrestler, and a CNBC contributor, but you could be. Could have done anything, I think, sometimes, Jan. And Dana Telsey, CEO of Telsey Advisory Group. Where did you toil for so many years when we used to talk to you?
Bear Stearns,
that's right.
C.J. Lawrence, Barron Capital, right. 3, and then Telsey, then my own firm.
All right. Usually dressed so well, but he's really got some Mickey Mouse cufflinks on today that look great. Anyway.
Literally.
They actually are Mickey Mouse. Anyway, first let's talk about Tiffany, which beat on the bottom line earlier this morning. Tiffany missed comp store sales estimates, but reported double-digit growth in mainland China. So we are finding out that sometimes Chinese tourists come here to shop at Tiffany, and they aren't coming. Is that part of the problem? Is that really
what you had in the first quarter, the Chinese tourism trade was down 25% in the U.S. And given the decline that you had in the second quarter, it couldn't have gotten much better. And we're hearing this for all luxury goods companies, that essentially the weakness in foreign tourism is impacting their businesses. It's got to be made up by the locals, and the locals were even a little bit soft too at Tiffany's. It's going to be the new product in the back half of the year that's got to work to deliver the numbers.
Yeah.
Well, I never disagree with Dana, but what I will say about Tiffany's quarter they just reported, despite the fact that stock's up, it was terrible. Top line was terrible. The gross margin was terrible. They made it all up on expenses that are going to come back in the back half of the year. The only reason the stock's not off is because expectations were that it might be a real disaster.
Well, the stock is off because now the street is recognizing exactly what you saw.
Finally agreed with me.
It's just like good cop, bad cop. Dana would never say that in those terms. Would you, Dana? Would you ever just
there's
say
always
that
ways to phrase things.
So this is fun. Yeah, you guys should take this on the road.
Think about the fourth quarter.
Yeah.
It is about the fourth quarter when Tiffany makes all their money. The first 3 quarters, the lead up to the fourth quarter.
It wasn't as bad as Jan said, or do you think it was
It wasn't great at all. I mean, second quarter for all of retail, and we talked about this before, the theme of 2019 is margin flow-through, and we're not having the margin flow-through happen in retail.
Okay, let's do Costco then. And apparently, massive demand for this company's products from the warehouse club in China.
Yeah, amazing. I mean, did you see the lines there?
Yeah.
And they had to close early because of the traffic. It certainly helps that since 2014, Kirkland's, their private label product, was sold on Tmall, so that helped. But the traffic was huge, and there's more opportunity for Costco to open more stores in China.
I'm afraid to go to you.
Costco is the best retailer in the world.
Okay, there you go.
Japan opened fabulously. Korea opened fabulously. China opened better. Because it's a first-class problem to have to shut your store because so many people want to shop there. I'm not going to worry about that. That's going to fix itself. But yes, I thought it was fabulous. But I've been a Costco fan forever. They perfected club warehousing, just like Walmart perfected price, Amazon perfected convenience, and Costco perfected the club. They're the best retailers in the world at what they do.
The Chinese export deflation, we export Costco.
Exactly. Well, and think about it this way. At least we're seeing now, Tiffany had good numbers out of China. Costco's got this great opening.
That's what
At
it
least
said
the
to me,
consumer doesn't hate us there yet.
Exactly. That's what it said to me, too, is that maybe the gap is not as wide as we may think it is.
I think that was the best news on Tiffany, by the way. Yeah. I expected tough numbers out of China because, we've been seeing these reports that say their name is not resonating as well as it had in the past. Well, this certainly doesn't make that look like that's true.
Exactly.
This was a really good number out of China. It was the rest of their numbers that were a problem.
And when you think about Costco, they love bargains and value. And what does Costco deliver? Bargains and value.
All right, well, let's do Best Buy. They're reporting second quarter results tomorrow, so we can actually look ahead and could feel some pain from China tariffs, do you think, Jan, or no?
Well, I don't think we're going to see much new this quarter. They can certainly feel some pain going forward out of China tariffs because electronics really matters, and it's a very competitive business, and they're the last man standing outside of Amazon as far as doing electronics. I'm a Best Buy fan, but I'd still be really nervous about the coming quarters as these tariffs kick in until we see where they're really going to be.
It's going to be tranche 4 that hurts more than what you have on tranche 3, because tranche 3 is only around 7% of their cost of goods sold. It goes up exponentially as you get to tranche 4. But some of their service initiatives that they've put in place have worked for them, and they've been a destination. Stocks come down since its peak after they reported the first quarter. So every retail stock, they're down 20 and 25% from their peaks.
See, that's exactly what I was trying to say. She just says it better.
She does it. For years, I don't know if I've ever caught you in an That's what we used to talk about all the time.
Yeah, don't believe in the Doesn't work.
You just said one.
I know. I said don't believe.
Oh, yeah, you did. That's the only time I've ever heard.
She had to work at saying the
Right.
She did. I had to drag it out of there. All right, thank you, Jan. Thank you.
Thank you.
See you, Dana, on set.
When we return, we're going to get you caught up on all of this morning's market action. Also get you prepped for the opening bell, which is just about 35 minutes away. Also today on Power Lunch, don't miss a live interview with NBA legend Shaquille O'Neal. He'll talk basketball, his work in the gig economy, and much more. Stay tuned. Squawk Box will be right back.
Kevin? Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search Combo Offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Our guest host today is Joe Terranova, Senior Managing Director at Virtus Investment Partners and a CNBC contributor. We were down triple digits, now we're down about 70, but worse than where we started as yields started dropping again. It's counterintuitive that yields go up and the market actually gets some strength.
Well, you lose the sense. I think we're beginning to lose the sensitivity in that cross-asset correlation. I do, and I think that's favorable for equities.
Okay, so they're not going to go down every time yields fall anymore.
As I said, same thing that happened with the Chinese currency when it was above, when we were above that 7 mark. You lose the sensitivity over time. So.
Yeah, even when it's a recession, even when it's a recession indicator, it doesn't mean it's tomorrow. It usually means 20 to 22 months down the road or something.
Right.
So.
I don't think we want things going below a percentage point.
Yeah, but we have to look at other things. As I said before, look at high yield investment grade spreads, they're half of what they were in 16. Look at oil, which is a relief to the consumer. It's about the dollar. You're going to get the cuts from the Fed. Now tell me about what we're going to do about the higher dollar.
All right. Thank you, Joe Turner. Nobody gets to do 3 hours, guest host.
Well, I appreciate that.
That means it's got to be...
I got to go back to Scott.
I
got to return to Scott now.
Great to have you here. Folks, we'll see you back here tomorrow. Right now, it's time for Squawk on the Street.
Y'all can't give it up, so come on and show me what you got. It's about to be on, baby, non-stop. Tonight you're gonna get your time to shine. Your body but stars and hits.
Good morning and welcome to Squawk on the Street. I'm David Faber with Sarah Eisen and Mike Santoli. We're live from the New York Stock Exchange. Jim and Carl have the morning off. Let's give you a look at futures. We start trading, of course, a half hour from now here at the New York Stock Exchange. You can see we are set up for what appears to be a lower open for the major averages. Our roadmap this morning does start with, fueling fears of a nearing recession. Yeah, stocks, as you saw it, are set to open a bit lower. This after key yield curve inversions.
Well, it's Tiffany's mixed quarter, the luxury retailer with an earnings beat, but revenues did fall short, shares sinking ahead of the opening bell.
And Peloton is getting set for its public debut. The high-end fitness company revealing growing sales but widening losses ahead of its initial public offering. As we've already said twice now, stocks are set to open lower on worries about global growth and, of course, the risk of recession. Investors paying close attention to that yield curve and its inversions of the 2 and 10 in particular, as well as trade tensions between the U.S. and China. About an hour ago or so, we got a presidential tweet, quote, so interesting to read and see all of the free and interesting advice I'm getting on China from people who have tried to handle it before and failed miserably. In fact, they got taken to the cleaners. We're doing very well with China. This has never happened to them before. This, I assume, being a reference, of course, to the large tariffs that are in place that are set to go up September 1 and then December 15, and the overall war. But there's been some press recently that sort of echoed some things that I was hearing and shared on Monday, which is the idea that the Chinese have pulled back to some extent from trying to really see if they can engineer some sort of deal at this point. It's always difficult to know based on who you speak to. I rely, as you might expect, on more of the people who are doing business over there and talking to the Chinese leadership than talking directly to them, whether or not you could believe them anyway. But the line has been that they would like some time to pass for those who are in opposition to realize the interdependence of these two economies, and perhaps they would take a step back. That is being echoed in other reports this morning, perhaps contributing. Well, then you've got the Chinese currency down, I think 08, right, Sarah, is the lowest we've seen since 2008.
But they made it actually stronger than expected last night. So that was actually taken as a good thing. It's yields. I mean, that's the story. It's bonds that are front and center right now, whether it's trying to figure out, as we all are, what the next step is, what the Chinese and what the U.S. side are doing on the trade war, whether it's the impact that's going to have on the economy, on earnings, which are seen grinding to a halt, or whether it's just the enormous central bank stimulus we're preparing from every single corner of the globe. We're continuing to see this pressure on yields. The 10-year yield is below 150. We've got a number of inversions going back to May 2007, March 2007. We now have the 3-month 30-year inverted. You can debate what that actually means, but clearly equities are taking a cue from that. Yesterday, Mike, we saw that sell-off. Banks were the worst performers. Treasury yields in the driver's seat.
Without a doubt. I mean, it still remains, stocks still remain within that gravitational pull of yields. The entire the curve from 1 month out is below 2%. So I think the absolute levels matter a lot too. I think one of the things the markets are dealing with is the fact that the lead up to an actual recession, however long that lead up is, looks a lot like a false alarm. It looks a lot like a recession scare globally than we got in 2011 and 16 and all the rest of it. So it's hard to distinguish between it. And so if the trade standoff is kind of, at a standstill, and we have to consider this just part of the backdrop, and emerging market currencies continue to fall, it has that sense out there that activity is grinding slower.
Well, Mike, you know how the rest of this day is going to go. We're going to discuss a 49 now basis point spread in the 2 and 10 year, and almost all of our guests are going to say it doesn't mean anything.
Sure.
It is simply a sign of the fact that you cannot get a yield anywhere in the world, and that the money has to find a home at least with a 1 in front of it.
And that is true to a degree. And I think maybe it's important to keep two separate thoughts in mind at the same time.
Well, I'm not capable of doing that, sorry.
It's not meaningless, but it doesn't mean everything. I think that's the way to think about it. So there is, if you go back to the mid-2000s, people were trying to write off the inversion then too. They said there was a global savings glut, and that was suppressing yields on the long end, right?
Of course, we didn't have negative yields. I mean, the bund now is negative.
What's different now is, in a way, the Fed's no longer tightening to steepen the curve. So they're going to be, in theory, move against this inversion direction. We'll
Let's see if it holds true. Let's see what we get from our guests here, right?
Yeah, joining us at Post 9, Deutsche Bank Chief International Strategist Alan Ruskin and Invesco Global Market Strategist Brian Levitt. How are you explaining, Alan, the yield curve inversions across the curve to your clients?
No, I think you hit the nail on the head to some extent. I think the global backdrop is usually bullish. I think there's just a rush for yield. I think people ultimately think that most central banks are going down to zero. Some are already negative. The Fed is perceived in the longer term, I think, as potentially going down to zero as well. That's not an awful lot of stimulus in the package there. So I think people are just looking for duration and looking for yield, and it's a global phenomenon.
I am not going to be one of the guests that David predicted he would have on the show today. It's an ominous sign. And cycles end with policy mistakes and inversions of yield curves. Now, just because the yield curve has inverted 4 to 5 basis points doesn't mean that this cycle has to necessarily end. But what it does mean is we need greater clarity on policy. Now, the usual cycles end, to Michael's point, with the Fed raising short-term interest rates above the 10-year. This time is different. The Fed is in an easing cycle, but as long as the uncertainty persists around trade, and as long as business sentiment, business investment, new orders all slow, the 10-year is going to go along with that. So what do we need here? We need the Fed to cut interest rates further, and we need clarity from the administration. It doesn't mean we need a trade deal tomorrow, But we can't keep going on with businesses not understanding the rules of the game, because if businesses don't understand the rules of the game, it's very hard to put investment into place. And without investment into place, growth slows and yields go further.
We're seeing that. So are those the policy mistakes you're referring to, or are you expecting further mistakes?
No, these are the policy mistakes that I'm referring to. I mean, look, the Fed made a policy mistake last year, raising interest rates 3 times in what was still a largely slow growth, disinflationary world. They're backing off of that mistake. The administration, regardless of what they want the ultimate outcome to be, needs to at least provide some clarity to the markets. So protectionism, we all know, leads to inefficient economic outcomes, but it doesn't mean it's necessarily recessionary. It's when there's uncertainty that persists for a long time where you could really end up with a strong dollar, weaker earnings, and dare we say even a recession. I don't think we're going to go there in election year. I actually think the administration is going to work to try and put a bottom in here and try to get rates back up again. But the risks are rising to this cycle.
I mean, bonds have been such an amazing performer, Alan. I guess you have to wonder if just mechanically people are going to say that we've had an overshoot to the downside in yields, and that positioning is going to get so extreme in that area that if for no other reason that everybody who's likely to buy has bought, might back off for a while. Is there any hint of that?
There's potentially some truth. What I tend to like to look for is the idea that there's some self-corrective mechanism in place. So, for example, bond yields have come off so sharply by, call it, say, more than 150 basis points. That's equivalent to net stimulus from the Fed of twice that, roughly like a 300 basis point cut from the Federal Reserve. That should feed through to the economy. That stimulus in terms of the economy taking hold and growth taking hold should then feed back onto bond yields, and bond yields should back up. The problem I think you're finding right now is that the bond stimulus is not really feeding through in a particularly meaningful way into the sectors that it should do. So you look in housing, you look at, for example, the MBA house purchase data today, still a little bit weakness. You look at the refi numbers. Yes, they've spiked, but they don't seem to be spiking into the Netherlands that we've seen before when bond yields hit new lows. So I'm concerned that you're not actually getting the refi feeding through to the consumer. There are a lot of things there that suggest that there's not the same traction that you're getting from the bond yield side onto the economy.
And on the stock market, I mean, CNBC running a big headline that the S&P dividend yield is now above the 30-year Treasury yield for the first time since March 2009. That was during the depths of recession.
Right.
I don't know whether that's bullish or bearish for stocks.
Well, I mean, look, you're going to need a catalyst for this trade right now that we're in to change. And I liken it to what we saw in 2016. I keep coming back to that because throes of a policy mistake, stronger dollar, tighter financial conditions, and at that point the Fed backed off. Equities looked very attractive compared to bonds. Bond yields back up. People were intrigued by the dividends in equities. So I think we can get back to an early 2016 environment. But again, to come back to my point, we're going to need to know the rules of the game.
Yeah, but you also said you think the administration has to work to get rates higher. I heard you say that,
They've got to work to get...
We've got a president who tweets every week that he wants rates to come down 100 basis points.
Well, I think we need to be clear about which rates. So I agree with you, David, that the short rates, given the deflationary impulses on the economy right now and the strength of the dollar, need to come down.
Okay.
What you would see if you had greater clarity on trade and better economic activity would be 10-year rates backing back up. So you would steepen the yield curve through policy on the front end, clarity on the long end.
Finally, Alan, we're end of the month. We expected all this pension fund rebalancing given the outperformance of bonds. Not quite seeing it right now. Is there any reason to think September, October is going to be different from what we saw in August?
Not really. I think actually when you look at September and October and you look at the kind of events that are coming up, the Brexit side, the tariffs that we're likely to have implemented at the end of this month, the beginning of next month, that clarity that we're looking for in terms of US-China is not likely to be there. Hong Kong lurks in the shadows. So I think you've got enough global events that are essentially going to keep this thing rolling in terms of global yields generally suppressed, and I think therefore suppressing US yields.
Alan and Brian, thank you both for joining us this morning.
Thank you.
When we come back, Peloton files to go public despite what has been, of course, this recent market volatility. We're going to take a closer look at this fitness bicycle maker. Well, it's a lot more than that, isn't it? And its plans, of course, to go public. Here's one more look at futures. We're going to get started with trading here about 18 or so minutes from now. You can see we are set up for a slightly lower open. We are off the lows, at least this point on the futures. More Squawk on the Street straight ahead.
This CNBC program is...
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th,
It's me, the Losers Club has officially begun.
they're back, and so is he.
We didn't stop it. The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Dad, I'm bored.
Why don't you help me hang the washing up?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Rainham Marshes and go tree spotting on the way?
Yay!
Look online for Asda Tour de Fun to find amazing walks here in London. From lakes and logs to forests and woods. All powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Bicycle, bicycle. I want to ride my bicycle, bicycle, bicycle. I want to ride my bicycle.
Peloton has filed to go public. The move coming in what has been an eventful year for IPOs. Of course, Beyond Meat, which we love to speak about here, has led the top performers, up more than 500% since it debuted back in May. Then we've had a couple of others. This thing called Uber didn't do particularly well. Lyft maybe not quite as well as it had hoped. Leslie Picker's here at Post 9, though, regarding the details on the Peloton IPO. Not a surprise to get this.
Oh, yeah.
But an important company and probably a very well followed or closely followed IPO to come.
Definitely. They had filed confidentially back in June, but now, of course, we know, what the contents of that 200-page prospectus is, and investors are already starting to assess the fitness of Peloton as a public company. Top-line growth doubling in the year through June, although losses quadrupled over that same period. Digging deeper into the financials, though, Peloton makes the bulk of its revenue from selling fitness products. They don't break out how much comes from the bike versus the treadmill, other than to say, quote, a significant majority comes from the bike. The treadmill was launched just last year, though. About 1/5 of Peloton's revenue comes from selling $39 a month subscriptions that allow users to tap into their live or on-demand workout classes from home. Peloton says they have about half million subscribers with triple the number of members. These key metrics will all be considered by investors as they model out a price that they're willing to pay for Peloton shares in a debut that could come as soon as next month. But Peloton's vertical integration makes it a little harder to know, right now at least, what kind of multiple it could achieve. They say on page 3 of their prospectus that they're a technology, media, software, product experience, fitness, design, retail, apparel, and logistics company. CEO John Foley says in a letter in the prospectus that the decision to be a company that does all of those things was, quote, against prevailing conventional wisdom, met by countless investor conference rooms full of very smart skeptics. Its private investors no longer appear too skeptical. Peloton was valued at $4 billion and is reportedly seeking twice that valuation in the IPO. Now, it's worth noting, guys, Comcast, the parent company of CNBC, is an investor in Peloton.
People, I would think, Leslie, are more likely to value at a higher multiple a subscription model than one that is selling expensive bicycles.
Certainly.
It's only 20% right now, but I would assume that they are going to make the case that it will become a larger and larger percentage of their revenues. And obviously, the recurring nature of that is something you may be willing to pay a higher multiple for.
Certainly. And obviously, it makes sense that once you buy the product, then you will buy the subscription service on top of that product. One thing I did find really interesting, though, is that gross margins for both the products as well as the services, the subscription, were almost equivalent, about 43% for each of those in 2019. Now, that's changed over time. It's gone up for the product, for the subscription. But I was surprised to see that they were pretty equivalent. I think a lot of that does have to do with this idea that the company is vertically integrated and then that they do kind of control the entire end-to-end experience, and so they don't have to outsource, manufacturing of the product or marketing of the product or delivery of the product or anything like that.
One risk factor I thought was interesting because it relates to our conversations every day was that they're exposed to tariffs.
Yeah.
That they have been hurt by the tariffs already in place. U.S. rates on specified products from China see that as a risk that it could continue and have a material impact on gross margins. Are the bikes fully made in China?
It's the components in the bikes that are made in China, and that is what is subject to tariff, at least according to their prospectus. So it is interesting, too, especially you mentioned the timing and what we've seen over the last few weeks with the volatility and how the market does seem to react and punish certain stocks that are more exposed to the tariffs and reward stocks that aren't as exposed to the tariffs, given kind of the nature of the tweets and the news cycle and all of that. It is interesting that Peloton, given their manufacturing in China, and that they do have some exposure to debut in this environment.
I wonder if the bulls are going to invoke Roku as you have a device, it's playing a big trend, but really it's a Trojan horse for a subscription service, and we're going to be a content provider thereafter.
Yeah, that is an interesting question as to what the exact comps will be when this company goes public, because you could invoke a Roku. They do have the hardware, they do have the software component, which you don't see quite as frequently. But then Peloton on top of that has this whole, fitness component to it. They also create their own content, which is a whole, different ballgame in terms of how you would value and assess a company. So it's pretty interesting. It's also worth noting that the CEO, John Foley, in his letter talks all about endorphins, and endorphins make people happy, kind of like the quote from Legally Blonde.
Yeah.
Very much.
No,
Did
no
he
secret.
quote it?
Exercise makes us feel good. It's simple science. Yeah.
He just hoped you got it, I think.
Yeah, he did not credit Legally Blonde in that letter. But for those, who have memorized that movie, they may have,
like all of us,
picked up on that line. Exactly.
It's pretty good. Leslie, thank you. As we count you down to the opening bell, let's take another look at futures right now. Seeing a bit of a recovery. Dow futures down 52 with about 11 minutes until the open. More Squawk on the Street live from Post 9 at the NYSE when we return.
So, how are you feeling?
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialize in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
You did it. A-levels are finished, and now everyone's talking about what to do next. Sound familiar? If you're still deciding, look no further. Because sometimes a sunny day like today can mean a new perspective. So this afternoon, why not check out the courses available through Clearing at the Uni of Bedfordshire and see how you can make the most of their incredible industry standard facilities. Find out more and apply now at beds.ac.uk/clearing. University of Bedfordshire. Graduate as a professional.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way and give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
All right, there's a look at our futures. Of course, you can see that we are headed for what appears to be a lower open this morning. We're going to get that open, by the way, a little less than 8 minutes from now. Stay with us on Squawk in the Street.
September 19th, Vice President Mike Pence live at the Delivering Alpha Conference. Just one of the influential names at the most important investor event of the year.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Dad, I'm bored.
Why don't you help me water the garden?
Don't worry, this summer we've got loads of exciting activity ideas to keep the kids entertained without even having to leave London. Make the most of the sunshine and go raise paper boats, pick wildflowers or make a rocket pack out of a cereal box. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Edge-to-edge intelligence gives you the power to see every corner of your growing business. From using feedback to innovate, to introducing products faster, to managing website inventory and network bandwidth, giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
With the Grubhub delivery app, if you want it all, you can get it all. Grubhub. Restaurants you love, delivered.
Guys, how frustrating is it to find a great pair of jeans? Too tight here, too loose there, too long there? Standard jeans use just 2 measurements. Tailor custom jeans use 7 different measurements to give you the perfect fit. Your phone can measure you right now. Download the Tailor app on iOS or Android. Choose from hundreds of styles. Tailor measures you digitally and is 20% more accurate than a professional tailor. With free shipping and a money-back guarantee, get your new favorite pair of jeans today. Tailor, available on the Apple App Store or Android.
Oh, wow. You two are going to have such a great trip. Thanks to you, we will.
This is why Voya helps reach today's goals.
All while helping you to and through retirement.
Can you help with these?
We're more of the plan, invest, and protect kind of help. Voya, helping you to
and through
retirement.
All right, we got a little less than 5 minutes before we get started with trading here at the NYSE. Let's bring in Kenny Polcari, principal with Butcher Joseph Asset Management, also a CNBC contributor. What are you watching this morning, Kenny?
Listen, what are you watching? We talked about this on Friday. It confuses anyone because, quite honestly, the small caps are typically